The MoneroTopia Price Report segment is sponsored by Exolix, a privacy-focused, non-custodial instant crypto exchange. Go to exolix.com to enjoy secure and completely anonymous swaps with no KYC or sign-up. Swap between Monero and 2,000 plus assets at the most competitive rates and with no limits. Exolix.com, your fast and secure way to privacy.
All right, buddy, what's going on, man?
Hey.
How's it
Just
going?
watching the circus, man. Like you said, just got my popcorn.
You
got
gotta
my
be
coffee.
loving this, man. You gotta be loving this.
Well, you know, like it is something when you put yourself out there and you make a prediction like as hardcore as that, and you're like, I hope I'm not wrong. I'll look kind of silly if I am.
Yeah, you got a lot riding on this. People have their wealth riding on it. You have your reputation, buddy. No, but you've always been very good with qualifying things. You're not one of these guys who's like, yeah, I know what's gonna happen, or you're not one of these guys that claim to have predicted everything, or that's just been a broken clock that's right twice a day. You're always qualifying your things, and I think properly hedging what you say.
Yeah. I mean, you know, there's a little bit of dancing that goes on there, like, because I mean, in an ideal world, right? You want to know exactly what's going on, and you want to be able to say, hey, here's what's going on, and here's what's about to happen as a result. And the more that you can do that, you know, the more that you're like, okay, I actually do really understand what's going on. And when you fail to do that, especially in the bigger things, you start saying, well, can I really trade this? Do I really have like a conceptualization that's cogent, right? That's coherent. So yeah, like this is one of the big headline things, because like for me, one of my big things, for example, like I called the tops in 2021, I nailed the bottom in 2022, or pretty close to it. And so like my thing is like I want to watch the big stuff. I want to get on the right side of the market over long periods of time. The short-term stuff, I'm not, you know, admittedly, I'm not nearly as good at understanding, you know, where the market might go like tomorrow. But in terms of like where we're at in the big picture, I've really tried to make sure that I keep my orientation there. So, you know, we got to see. Like, I can't take a victory lap just yet, but.
And so obviously you're gonna get all into all this, but big picture, is Bitcoin crypto headed down to like a local bottom, or
I
is
have
it
to believe
headed
that
up?
I have to believe it's going to respond and crash with the rest of the market if the market is indeed crashing. It
Alright.
might have already front run some of that crash, right? You know, Bitcoin was pretty well down off its all-time highs, so maybe that's why it didn't crash yesterday. I am like, it is interesting to me to watch that crypto basically shrugged it off like nothing had happened. But I do feel like there's got to be a reaction here if we do continue to see more crash.
Yeah, if another shoe drops in the macro, I'd be very surprised. And like, yeah, I guess that's the best reasoning, right? It kind of ran it, and like gold did the opposite, right? Like, because gold pulled back because it was like, quote unquote, pumping so much. Like a pumping gold really is, it really isn't that significant, but gold was almost a little overvalued. Because surprising to see gold pull back on a day like yesterday, right?
Maybe a little temporarily, but gold is overall fundamentally a good asset to own. So if it pulls back, you should just be buying more.
Yeah. No, but I'm just saying, like in that scenario yesterday, right? We saw gold pull back more than Bitcoin, and I think that's only because gold was perhaps pumping a little bit more than Bitcoin recently. It would be my
like hypothetically, pretend
simple
we hadn't seen any kind of crash at all and things were just normal. Gold might have pulled back that much just on its own. Like it's very possible that pullback wasn't necessarily correlated with the rest of the market. Like gold has been on an absolute tear. Like it has been basically the best asset to hold here for months, really.
So I get, obviously you'll get into it, but you'd say we're not out of the woods in terms of saying, okay, Bitcoin has acted as a store of value in this scenario, right? To be determined.
Yeah, exactly. I don't think we really can say that. I mean, Bitcoin is down a decent amount from its all-time high. It's down like a normal bull market amount. It's not like anything crazy, but it is down. So, yeah, we're not out of the woods yet here. In fact, if things are problematic, they're really just beginning. So, like, this is just the beginning. If things are really gonna show us major problems here.
All right, man. I'll let you take it away. Get into the weeds.
Cool. Yeah. Well, so there's a lot that goes into this, so I'll probably do a lot of yapping today as opposed to chart astrology. Although we'll do some chart astrology as well, right? Astrology for dudes, not to disparage dudes or astrology. But yeah, we effectively, Monero looks like it doesn't care that a macro crash has started, and Bitcoin kind of also looks similar in the sense that it just didn't move. Nothing really too interesting with this chart, and I think that's a good thing. I think the charts that are the most interesting, the most active, those are the ones that have the most potential to dump. I like Shortwave's optimism. I like that he says, yeah, this $100 down here is a pipe dream. And at the moment, maybe it is a pipe dream, right? Maybe Monero never actually will or could get back to 100, absent like, I don't know, some crazy, terrible tragedy that could befall the network or whatever, or a Kraken delisting. But yeah, like right now, in terms of this macro crash and the rest of the market's crashing, and Monero is still up here. Yeah, maybe the best we could hope for would be like, I don't know, 150, 160. Even I think Shortwave, correct me if I'm wrong, but even that 135, you kind of scoff at the potential for 135. I would say that's like your first, like if there's truly a crash here and crypto goes with it, I would say 135 wouldn't be exactly a terrible spot to think that we might hit, and you could scoop up. That would be your last opportunity probably ever to get 135 on Monero. That'd be minus 42% from our local swing high here. But other than that, Monero is just basically consolidating in the place. We talked about these bands for so long. Blue bands curling up. You got these very long-term upper standard deviation band clusters here at the top. And really, we just kind of have to expect price to vacillate here for some period of time until the future comes along, and eventually, strength comes along. I assume this is going to have to be mediated by some liquidity expansion. So we're probably not there, but yeah, at some point this chart should break towards the upside, just from a tea leaves astrology perspective. So yeah, nothing too crazy exciting about the Monero chart. Let's expand timeframes a little bit. Maybe not timeframes, but let's just expand the chart and take a look at the broader picture here. I kind of changed the wave magic up a little bit to sort of make it present slightly differently. So I don't know how that looks for you guys, but kind of a different filtering strategy where I deploy some randomness, or I use some randomness to determine how to print lines, and it's just they only print on the basis of how likely or how dense one of the clusters is. So I don't know, it's kind of cool. Seems like TradingView seems to support it well enough. But anyways, yeah, so okay, interesting chart. Yeah, we're basically this was our 2021 top, obviously, and we're basically like this is such a good spot to be hanging out. Actually. This implies, like, because these bands go back so far, this is the major spot. You have to like hang out here, and then you have to get above these bands, right? Price has to effectively get up here, beat some of these levels, and then once it starts going, it's very likely just going to go. It's just going to take off from there. So, yep, good stuff with going on with Monero here. I'm totally fine with this consolidation. It means that the next move will be stronger. It provides a solid floor for the next move, because we might have to come back and retest this level after going up. Maybe we don't, but sometimes you do. So the longer we establish and push up against the limit here, the stronger that becomes as a support area later in the future. All right, so let's go here to Bitcoin versus Monero. And oh yeah, if you guys have super chat questions and whatnot, go ahead and send them. Oh no, crap! I just killed the charts. I'm sorry. Dang it. I was coming over here to try and make sure I had the super chats loaded, and then I hit the wrong thing.
Good job there, buddy. Good job.
I'm coming back. You actually already got a question here too as well.
Do me a favor and let me know when we have those, because I don't have the super chats pulled up, or the XMR chats pulled up.
That's gonna have to be you, Doug.
Yeah, I'll try to bring them up on screen as they pop up.
Cool. All right, so Pseudo tipped 25 cents. He asked, do you think Monero has a slanted head and shoulder on the weekly? That's a good question. Let's take a look. I'm also sharing the charts now again. So a slanted head and shoulders. I'm not quite seeing it. I wish, man, if you had been slightly more descriptive. Do you mean like the inverse head and shoulders? I mean, the only thing I could see, I'm really not seeing anything that I would call head and shoulder. I'm trying to see it. I don't think I've ever heard of a slanted head and shoulders either. Let's go to shorter time frames. Maybe we have to be zoomed in. If you want to, if you're on YouTube, you can send it to YouTube comments, or give us another super chat, for like a penny, and take a look. I don't think I see anything that I could call a head and shoulders, or even like a slanted kind of rotated head and shoulders here. I'm just not seeing it. I don't think so. So I think to answer your question in a short sense, I don't think so. But thank you for the question. Always good to try and say, hey, is there something here I might have missed, right? Is there another way to organize your thinking around that? But yeah, I don't see it, but maybe it's there. I'm just, too autistic or not autistic enough, perhaps. I'm not just the right amount of autistic, apparently, to see that one at the moment. Anyways, all right, continuing on, we have Bitcoin versus Monero, and Monero's doing quite well versus Bitcoin. Again, same kind of story. We're up here in these upper standard deviation clusters, continuing to follow along that. Again, on a chart analysis standpoint, it would there's one of two things that could happen. Either you would expect to like kind of tag this back here and then get back to the upside. That maybe could happen, I don't know, due to some big fundamental event like a liquidity expansion, or I don't know, maybe everyone seeks the safety of Bitcoin in a macro crash or something. But overall, I really like the strength here. Chart is hanging out at the upper standard deviation levels. I don't have a big opinion on this because this isn't really a technical analysis chart. This is really fundamental. If crypto is sideways, slightly down or slightly up, then this chart tends to go up. Monero tends to gain, right? Things tend to equalize. But during volatility, whether to the upside or the downside, and especially towards the upside, when you see liquidity pumped into the crypto market, it goes to Bitcoin, it goes to altcoins, it doesn't go to Monero for the obvious reasons we've talked about over and over again, right? They just don't like Monero. I like the coin, but the cabal doesn't like the coin. So this chart could do anything, honestly. But I do like that there's consolidation here at the upper standard deviation band. That implies strength, and right, that's a good thing. It's not a bad thing to be showing strength over a long period of time, over a couple months long period of time here with Monero. Nothing interesting with Monero versus gold. Nothing really happening with the divergences. So yeah, I guess that's really we can let the Monero price go for a little bit. We got our hash rate here still hanging out at the top side, which is that's like that's a strong indication that people like the network, people are mining the network, people want it. Maybe it's just botnets, I don't know. And then we have our transaction count, which is still hanging out here just below 30K. It's just kind of like oscillation pattern. Okay, cool. Definitely fine by me. So before we talk about crypto, we should really talk about the macro. It is interesting to me that like crypto just like especially Bitcoin hasn't crashed, and in general crypto just held steady, held its own. So we'll come back to that. Put a placeholder there. Let's talk about what happened this week. Let's just talk about the fundamentals, and then we can get into the prices of stuff. So what happened this week is we had Trump announced, it wasn't Victory Day. He announced like some kind of special day that we would henceforth forevermore celebrate.
Liberation Day.
A Liberation Day. Yeah.
He threw a grenade into the markets.
Seems like it should be called Reciprocation Day, because he said we're going to announce reciprocal tariffs. So that was the whole thing on Wednesday. He made a big hoopla. We're going to announce reciprocal tariffs. We've been getting taken advantage of for so long, and we tried to be open and fair and share with everyone, and they didn't. So now we're going to close up the markets and we're not going to do that anymore. Okay. It was a big thing that he was, because he's been waffling this and that, tariffs here, tariffs no, and, negotiation and art of the deal and all that political fapping, right? But Wednesday was for real. Wednesday was a serious day. And I wouldn't call it Liberation Day unless you like being liberated from your wealth. That's definitely that's happening here. But effectively, Trump announced that a 10% tariff at a minimum against every country in the world. Everyone that imports anything to the United States is going to pay a minimum of 10%. And then he released this really large tariff schema, for other nations. A lot of people have been making fun of them for taxing penguins. That's if you don't know what that is, just go look it up. The memes are great. They taxed some island with a bunch of penguins that has like no people, and so penguins have been in the White House, at least in the memes, etc. The point is that they made up all these tariffs to reciprocate against other nations like China and I don't know, whoever else, all of them basically, Mexico, Canada, everyone. And some of them are pretty steep, and it's really affecting business. They're effective immediately, and businesses are like, wait, crap, what do we do? Now, this is going to be a long rant, guys. I apologize in advance for the long rant that's happening here. My thoughts aren't like, I don't have like a nice presentation that's well structured. I have some notes, so I'm trying to cover everything. Let's just start from the big picture, okay? What is a tariff? A tariff is a tax, anytime that a good comes into your country. And at this point, minimum 10%, but more like 20, 30, 50% in some cases against some nations. It is maybe dubious the way that they calculated these, maybe not. They apparently they looked at trade imbalances and then basically tried to say, well, that's the tariff happening, right? That's the imbalance in tariffs is correlated to the imbalance in trade in our trade deficit. So let's just market it that. Then again, I did hear that a little bit offhand. So, but that sounds like the thinking of a politician to me. Regardless, irrelevant. Let's back up. Let's take a bigger view and ask ourselves, what is a tax? What happens when you tax something in the libertarian, anarcho-capitalist free market kind of Austrian paradigm? When you tax something, you get less of that thing. You make it harder for people to produce that thing. And at this moment, that's everything, because there's a tax on importation of everything, right? So from a very simple perspective, everything is being taxed. Everything is going to slow down. And this into an economy where we already had the macro stuff, as I've showed you guys, that are already repeating the patterns of leading into another macro crash, right? You get the liquidity pump. You get some market that's really, really, everyone's hyped up about. In this case, it's AI. And then the leverage happens. And then at some point, it expands too far. The Federal Reserve doesn't expand any further, right? They cap out, what's going on. And then the market unwinds, right? That was already sort of in progress, slow motion. And then these tariffs, you're basically adding a global slowdown factor, because America is like the open capital markets nation. You add that into an economy that was already hitting max leverage from the AI hype. And what is that going to do to the economy? It's obvious. It's freaking obvious. Like it's not a question. So we're seeing that, the markets are seeing that. Companies everywhere that do any business or import anything into the United States are now like, okay, well, crap, we've got to do all this. There's even things like where people have contracts where they're like, okay, I've already contracted with this other company, say Walmart or whoever, like maybe I'm a small supplier of some product. A lot of these guys contract to other companies to provide a product at a set price, and that's non-negotiable in the contract, right? They have to continue providing that. But there's no way that they can do it now that they're facing 10, 20, 50% tariffs. And a lot of these guys are going to go bankrupt. In a lot of ways, this is going to affect the small guy more than the large guy, because who can get access to quick capital, to large amounts of capital to sort of cover their problems while they figure things out? It's always the bigger guys that have the easier time there. So we're looking at more destruction of small business, which is, that's just par for the course, right? We saw it with when the economy caught a cold in 2020. We saw we've seen it over and over again. We've seen it in 2008. They wrecked the small banks, and the big banks, took over. There was 4, now there's 3, and it just keeps getting smaller and smaller. So like that's happening in the background. But let's talk about production, right? So my background is working in a semiconductor fabrication facility as a process engineer, right? So we like the complexity of how that shit goes, like how it works, is insane. We require raw materials of extremely high purity, many of which have to be imported from many other countries. You have, like, humans will do this thing where we'll make a tool to make a tool that makes another tool, and that tool actually is the thing that makes the final product. And all of that tooling is cross borders, even for simple stuff, guys, like little tiny parts. You might have the same part that just crosses a border 2, 3, maybe even 10 times to get some kind of treatment. Like you might have 2 facilities that are sort of tandem facilities that actually are on different sides of a border. There's like, even just here in North America, you've got aluminum processing that goes into all sorts of things. And it crosses between the United States, Mexico, and Canada. That's just how global production is. Like raw materials that are needed are everywhere across the globe. Sometimes it's more efficient to process them where they are. Sometimes it's more efficient to process them somewhere else. Even the simplest things that you think, oh, that's easy to make, it's not. Like even a pencil, and there's like this classic ANCAP example. Even a pencil is hard to make, and it requires resources from across the world. So what happens? You're slowing all of this trade down. All of these things are getting slowed down. The ability to just move products, parts, pieces, all of the supply chain, the logistics that you need to produce the thing that you're trying to produce in a much, much larger picture, all of that just becomes extremely difficult. And so there is no like, we're going to endure a little bit of pain here so that our future becomes bright to bring back manufacturing to America. No, that's not how that works. That's not how this works. That's not how any of this works. Like, to some tiny degree, maybe, but that's putting the cart before the horse. That's misvaluing, that's misunderstanding the economy. What actually caused American manufacturing to leave the United States? What is the actual thing that caused us to lose the manufacturing base? The primary thing is that the United States prints the global reserve currency, which became depegged from gold, 1971. So we print a lot of currency and then export that inflation to China and everywhere else, and then they give us real goods and services, and we have no tariffs on that, right? So we get to export our inflation and import everything for free. And the simple fact is that it costs a lot more to produce anything in America, regardless of tariffs, than it does to go to a place that has no regulations, gives you a sweetheart business deal, and you can get cheap labor there. Like, your tariffs are not going to overcome that problem. They might, to some tiny degree, overcome that problem a little bit, to some very small amount. But then again, like, how are they going to overcome that problem when everyone's poor and the market crashes and no one has any more money because the economy's freezing up? How is that going to ultimately increase business even in the long run? It's not. It can't. The only way that can happen is they're going to have, if there's going to be some big crash, the market, we're going into recession. Like, it's happening, guys. We're already in a recession now. And that's the first time I've said that since, to say that we are already in a recession. I haven't said that since, even since like during the bear market, but we're in a recession now. And it's going to be very clear as the months go by that, yes, we're in a recession now. And the tariffs they're not just the fuse at this point. They're actually part of the bomb. Like, they're not the entire bomb, but they're definitely part of it. So, the main thing is that America prints the global reserve currency. We get to print that money for free. I say we, but you have a credit card? Do you take a home loan, right? And then we export that inflation and we import real goods and services. The other thing too that has driven manufacturing out is we have high regulations and high taxes. If you really want to bring the manufacturing base back to the United States, eliminate the income tax for individuals and businesses, and reduce the regulatory burden. Get the Karens out of the bureaucracy, gut the bureaucracy, and then basically empower the courts so that people can actually bring suit against companies that are doing like bad things, right? Like, you don't need regulation. You just need people saying, hey, you poisoned my water supply. You owe us $1 billion now, right? So stuff like that. But you don't need these crazy regulations and the regulatory architecture that, is supported by the taxes, right? You can eliminate most of that. And that would actually bring significant manufacturing base. But let's address one more, actually two more things. Let's see. I'm sorry, I'm looking over my notes here. There's actually quite a few. There's still a few more things here. Wow. Okay. All right. Let's pivot back to the markets. Okay. I'll stop. I'll stop and rant a little bit more on the. So some people are like, well, it's not fair. It's not fair that other countries, are charging us all this tariffs and we're not charging them tariffs. It's lopsided. It's not reciprocal. It's not fair. We've been giving them a sweet deal. No. In China, if they want to import American electronics or anywhere, any other country, say Mexico, right? I pay like 15% extra on my electronics to get them here because of tariffs, right? Because Mexico charges that for their taxes, their import taxes. So just because other countries, and I pay that price, right? The consumer pays that price. Like, people that don't want a new iPhone 28, whatever the hell, I know they're not on 28. If you want the fanciest new electronics, like, the people not buying those electronics don't pay that price. It's the people that want the product that pay that price. Okay. So just because repressive governments are punishing their people with big import tariffs so that they don't have access to wealth or access to the kinds of cheap products that can be produced elsewhere, just because they're punishing their people, that's a non sequitur to then be like, well, but we have to punish our people here in America because those people are being punished. Because it's economically illiterate to say that it was the lack of reciprocal tariffs that caused the manufacturing base to leave the country. That is not what happened. And making reciprocal tariffs is not going to bring the manufacturing base back. You have to address the actual economic issues. And everybody here probably knows that it's the monetary system, right? It's the monetary system. So focus on that. Focus on the crime of income taxes. Focus on the terrorist government, right? Focus on all of that stuff. But tariffs aren't going to do that. That's just hoopla. It's a bunch of nonsense. And guess what, guys? The politicians know it. Trump knows it. Like, he's not totally autistic. Like, they know that tariffs aren't the thing. So they're trying to do something else. The question that we should be asking as the freedom community, anarchists, etc., we should be saying, what are they actually trying to do? Like, what's really going on here? Because it's not about bringing the manufacturing base back to the United States. If they eliminate the income tax, then okay, I might say, you know what? Perhaps tariffs could be some sort of like some sort of part of that, right? But until they actually eliminate income taxes or totally gut the IRS and make it completely facile, then I just like I'm not going to believe that that's what's happening, right? Like it's really difficult to believe that they're actually going to do that. But maybe I'll be wrong. I would love to be wrong on that one. So let's ask ourselves, what are they really doing here? What's the strategy that could be happening? So here's some proposals as ideas. Russia's currency. So we are like in this kind of like geopolitical conflict, you know, the West versus the East, Russia versus China. Yes, they all go to these big meetings and they're kind of friends, but they're also kind of enemies. Like the Chinese oligarchy would love to be dominating over the American oligarchy, right? And same thing, you know, with the Russians and their oligarchy. They would love to sort of be on top of that global power game. They cooperate when they need to, right? They know what's good for them, and they know that cooperation at certain levels is very useful. You know, like I think Ukraine, for example, was an example of them saying, hey, you know what, we got these old munitions and we have like now we've got drones, and that's like totally new technology with these drone warfares, and we got some AI. We could have drone swarms. And they're like, well, you know what? We need a test ground battlefield to really develop this technology. Why don't we use Ukraine? We can launder some money at the time, you know, at the same time. You know, we could gain. Russia's like, yeah, we can gain a little bit of land. And the United States is like, yeah, we can sort of spend our old and soon to expiring munitions, and then we can get new defense bills going on, right? Like that's okay. So there's one aspect there. We're looking at Russia now, and so Ukraine was probably like sort of this gentleman's agreement of a war. Like, yeah, let's have a proxy war. Sounds good. Yeah, okay. You know, you'll grandstand in front of your people, and I'll do the same, and we'll get some drone warfare going on here, and you know, screw the Ukrainian people. I think that's a big factor in what happened there. Anyways, but there is still kind of like there's still a real battle like happening there, right? There still is like a real struggle between the East and the West, between Russia and the United States to try and like figure out, you know, how are we going to proceed from here, right? There's still this economic warfare happening, and so part of this crash, I believe, in these tariffs is related to oil and Russia and the ruble. So Russia requires certain prices of oil to sustain their ruble price. You know, they're not nearly as resilient as the United States economy. They don't have the world's reserve currency, and they don't have control over the kinds of, you know, just vast swaths of the entire globe like the United States does. And so if we crash the oil price for a period of time, that hurts Russia. That definitely hurts their ruble. So there could be a geopolitical maneuvering going on there to try and force Russia into some sort of better terms and better agreements, and then like end the Ukrainian war. So I think that's potentially a factor. As always, one of the like their modus operandi is to wipe out business, the lower business, the small business, and then consolidate it into the bigger business. We've had a nice like 4-year run on the AI craze, and it might be time to wipe out a lot of those businesses and then consolidate things into the larger businesses there. So a nice recession is a great way to do that. So they're probably trying to consolidate. Here's another idea. The plebs have kind of figured out the whole tax schema and the loopholes for the corporations and the offshoring and all that stuff. A lot of plebs figuring out a lot of stuff about the IRS, and now it's time to change the game. Like, oh, you guys think you know what's going on? Well, let's change the game. Let's pivot to tariffs and import taxes, and then we will selectively lower the import taxes for big companies, right? But are they going to lower the import taxes for small business? Probably not. They'll probably pretend like they are, but the real tax breaks, as always, are going to happen for the big guys, for their friends, for the oligarchy, etc. So that's one thing. That's another like proposition of what's happening here, right? They're trying to create a new tax schema, and they're trying to preference the big boy friends, and in the process, you know, again, cyclically, they do this all the time. Expand, print, leverage, everything's good, a whole bunch of new businesses, and then .com, wipe out the low guys, wipe out the small guys so that Amazon, Facebook, the fangs can rise in the ashes. They can, like a phoenix from the ashes of the crisis they created. They can consolidate the control corporately of what's going on. And then later, you know, 10 years later, they can use it to censor your speech. So I think all of those things are very likely factors in what's going on here. And like, why now? What are the tariffs actually designed? What are they actually trying to accomplish? So I know that was long. I know that's a long rant, but I hopefully like that is a somewhat coherent picture combined with a little bit of speculation, brainstorming that you know, you guys can listen to and kind of make your own decisions, integrate into your own thinking. So, whew, all right, that was a long one. Let's get back to the charts and the prices now, and say, okay, with that in mind, with that big context in mind, this is like that's how I'm approaching when I'm looking at these charts. So hopefully you guys understand now that it's not just astrology for dudes. but I'm also incorporating a lot of fundamental things going on here. So we're on the weekly in oil. Let's go to the daily actually. And as we've talked about, right, I've said for a long time, this chart just this chart had a lot of propping up happening in it. And right, we were looking at this area saying, okay, we're in this zone here. You know, it's not terrible, but you know, this is our yellow zone, as we talked about. We said this is our red zone. When we get into the red zone, that's flashing at you like, hey, shit's about to go down. And shit currently seems to be going down. NASDAQ and S&P are already down 20%. So, but yeah, this chart was like, oh, I'm not going to crash. Let's pretend like nope. And then it fell down. And again, it was like, pretend I'm not going to crash. And then it crashed. So like, that's exactly what we expected with the oil. This was our alpha the entire time. As I said, like, this is the chart that tells you that something's really coming, that it's very close. So, yeah, that was useful. It'll continue to be useful. And again, oh, you know what, for those of you that trade oil, since I know all of you are on the regular stock market trading oil, let's take a look at levels. So if we're truly in a macro crash and this thing is, and it's truly, you know, economic warfare against the Russians, among other things, this is your levels, right? You're looking for somewhere between $50 oil and like 42, 44. Let's draw a line this way. That would be more better. Yeah, so I guess, yeah, about $44 oil, maybe 42 to hit this lower line down here. So in case you don't know what that line is, let's just expand. Probably you saw it already when I did the chart earlier, but this is a huge line, right? So this goes all the way back to the .com. So the .com crash, actually, it's interesting. Oil fell before the .com crash, so it doesn't always fall, but in this case, it was going to because of the tariffs and the economic slowdown, much like the C word back in 2020. So anyways, yeah, so we've got this long line here. It's formed by the touch of the pre.com crash. I don't know what the hell that was. I guess that was just the reaction off of the commodities bounce that happened into 2011, 2012. Anyways, so yeah, you'll notice that this line down here is sort of coincident, almost coincident closely with the orange bands here. The orange bands, again, are a zone. They're not a hard stopping point, but they can be. And at the moment, I wouldn't be surprised if $50 was a stopping point, but it could very easily drop here down to like 42. So anyways, 42 to 50 would be your target purchase area on U.S. oil in the event of a real macro crash and recession, which is what I think is the most likely thing to happen right now. Dollar dollar's going to be showing volatility, guys, as things go down. Like you saw the dollar crashing and then it had a big kind of reaction bounce at some point. If everyone realizes it's the macro crash, it's very possible people are going to go to safety of the dollar. But with the tariffs, like, guys, there's a lot up in the air now because these tariffs like are going to change a lot of the fabric of the global economy. And so it's very, very possible that we could see new regimes of market, like new profiles in the market, new patterns could be emerging as a result of this. It's going to take me some time to like process all that and think about like what might those patterns be. But in the past, and because of historic patterns, it's very likely that the dollar is going to find some major bounce, some major like upside at some point here when people run to the safety of the dollar, and then it'll start bleeding off as the intervention happens and JPOW comes out and whatever. Oh shit, you know what? That's one more thing I forgot to talk about. There's one more important piece here for why it is. I think that yes, this is truly a macro crash on our doorstep, incipient, happening in front of you from the comfort of your own home. So we had there was a JPOW meeting. It wasn't an official FOMC meeting, but it was just Jerome Powell got in front of a big audience and broadcasted live. And mostly they were all concerned about the tariffs and how things are changing. Okay, so what he communicated is that he said, listen, I don't want to respond to anything particularly that a politician says. I try to separate myself. It's appropriate for us as monetary policy people to separate ourselves from the whims of politicians and whatnot. So that was one thing, but here's the main thing. He says that right now we are slightly restrictive and we can move if necessary, but we aren't going to try and anticipate or decide what the market is going to do and then act in anticipation or in advance of what the market is going to do. We're going to let the market tell us what to do. We're going to wait. We're going to collect data. We're going to see how does the world respond to global tariffs, and then we'll act once it's clear that the data indicates that we should and that it's appropriate, right? That's a very lawyer way of saying we're not going to do shit. Market's going to crash. If it's got to crash, it's going to crash. But don't worry. Rates are high. We can bring them down. We have many tools. JPOW has a lot of tools. I don't know if he's one of, we're not going to see. We won't go there. JPOW has tools in his tool chest to respond to markets. So effectively what I heard is we're not going to do anything. have fun. Sorry, plebs, you're gonna get broke for a little bit of time, but don't worry, we'll probably reinflate it. So that's good to know, right? That's like a confirmation of, yeah, they're basically saying we'll rescue the market without saying it, right? Not so many words. We'll rescue the market once it crashes. So that's what we're looking for, guys. That's your max opportunity. If you want to short the market here, you can. Know that shorting is dangerous. Shorting is always inherently more dangerous than longing. My prime mentality here is to wait for key levels and then deploy cash that I've had sitting for a while. And you deploy that cash, you can deploy it on leverage, you can take risk, you can go for the riskier assets, and it's basically free money because they're printing money and everything's going to expand. Like that's just what happens. Liquidity comes along, everything's going to expand, right? So wait for Nvidia to hit those levels, and S&P, et cetera, to hit those levels, and crypto, whatever, AI cryptos to hit those levels that we're looking for, and then get in and then just sit tight, right? That's my strategy.
Buy your micro strategy, double X long, 2X longs, or whatever.
Exactly.
MSTUU or whatever that ticker is.
Yep. Yeah, I mean that's that honestly, if you're in the stock market, that is absolutely a way to do it. But hey, don't forget, you've got all these other ETFs that represent other cryptos out there. So you don't got to give Saylor, you don't have to cut him in on that deal. You could just go straight through BlackRock or Vanguard or any of the other big players out there. You get to choose which cabal participants. You get to choose which elitist that you prefer to hand your middleman money to. So that's quote unquote good, I suppose, winning, etc. All right, let's look at gold. Gold did that thing where we talked about it pulled back. So here's the 15-minute chart. And you'll see kind of why I love my wave magic. I know I talk about it all the time, but I mean, you've got the purple bands, did a good job there. Again, did a good job there. And now I have done a good job right here. At a minimum, probably on Monday, gold's going to get a little bounce at some point. And if it's going to crash, then it'll kind of do this and then make its way down. But that's the 15-minute chart. So let's just eliminate that and then come to the longer chart here. Hang on a second. Let me delete some of these lines.
While you're doing that, Body, I have to ask, when you do go to sell your wave magic, since that's something that seemingly nobody else has, are you going to sell it exclusively for Monero? Because that would increase the demand for Monero if you cannot buy it with anything else.
Well, I would definitely accept Monero. I probably won't sell this, bro. There's more work to be done here. There's more opportunity and leverage to take advantage of. There's algorithmic stuff. TradingView doesn't provide the kinds of compute resources that I need to actually make this thing as magical as I would like. But there's a lot of algorithmic stuff to extract out of here. So I'm probably going to do that. I actually had a long conversation with AI about this. And the problem is that it's really hard to sell stuff like this to companies, because in the process of presenting them what you have and convincing them that it's great, they have an engineer in the room and they're like, oh yeah, we could replicate that. That's no problem. Right. Like, for the most part, almost all these indicators, they're not anything cosmic. I'm not doing PhD advanced level mathematics here. Like, this is basic stuff. It's just a really good idea that somehow nobody thought of. And if I tell them what this idea is, they'll take it immediately and reproduce it. So like, I can't even sell it for a big ticket item. So then I have to sell it. I got to get a YouTube channel, and then I got to like promote it, and then I got to take subscriptions and do all that stuff. And that's a lot of work, right? Like, there's a lot of stuff to do. I honestly, I can make more money just as easily leveraging this on my own. So I know it's kind of selfish. I almost never even shared it with you guys. It took me like a year before I was even like ready to share it with you guys. I said, you guys are my friends, and you guys, like, I should share it with y'all. Y'all should be able to at least see what's going on here. So I wouldn't sell it to anyone that would pay Monero for it. How's that? To answer your question, if you would pay Monero, I wouldn't want to charge you anyways. So at least I can give you guys some stuff for free here. Yeah. Okay. So we got gold here on the daily, and gold, like we said, has been on a major tear, right? It looks really good. Actually, let's put gold on my new version of the Wave Magic, because I think it looks cooler. But yeah, gold needed a little pullback. Like, let's take a look here. Gold did a 4.5% pullback, but what did it do here? 4% pullback here. It did a 9% pullback. We have here 5% pullback. So I mean, like, gold didn't do anything yesterday that wasn't like already within its like normal volatility for the chart. Now, is this going to fall further? If there's a big macro crash, maybe, probably. It does seem like gold has been the risk off play. Like, markets have been de-risking, and it looks to me like they've been going to gold. There was a news story that Germany was like threatening or demanding its gold back from the Fed because of the tariffs or whatever. So there's actually on Friday, there was a counterattack there was a counterstrike by some consortium of nations that were like, all right, well, you want to try and tariff us? Well, let's tariff you even harder, America. So it's like, all right, now that's bad. So that's another reason the markets crashed on Friday. Anyway, so yeah, gold here kind of needed to pull back. It's still like, and it's still in its bullish band structure, right? It's still in this purple band, just riding that up. So honestly, guys, at this point, given the nature of how crypto is held and gold has just been on an absolute tear, like a rampage that I didn't expect gold to be on this kind of a rampage. Maybe I should have, because gold typically, from what we've seen, gold does go on a rampage pre-crash. Like, let's go to the weekly here. And then go back to 2008, because that is actually, I'm pretty sure what happened. I think I still do expect gold to crash. Like, maybe I'm not as super confident about that, but I think it's more likely than not that gold will crash going into, yeah. Okay. So look at this, guys. If you look at the bottom of the chart, here's 2007, and we continue on. This peak happens in March of 2008. That was basically, that was kind of the peak in the S&P, right? So gold really did go on a rampage back in the 2008 crash, before the crash actually happened. And then it ended up kind of trying to hold its own. And then you can see here, when the real crash happened, then gold crashed with it. So you'll notice, though, that's a very long time frame, right? Like the 2008 crash happened over the course of like 6 months, 7 months. So yeah, that's definitely something to keep in mind. Things can crash slowly, right? It could be a train wreck in slow motion. Let's go to 2020 and then check out what gold did during 2020. Let's expand. All right, so gold, let's go to, okay, so here's March of 2020. That's when like the big crash happened, and gold actually pumped as the crash happened. Like as the crash began, gold pumped. Gold had a big move. In fact, from December to that top, that was a 16% move up in gold. And then when things, when things began crashing in earnest, gold crashed with it, but it didn't crash that much, right? It only crashed like 14%. And that was after it had already made a big move up. So, you know, I do expect gold is eventually going to crash with the rest of the market, but maybe that time isn't perfectly now. Personally, I'm not selling my gold. I'm just going to hold through it. That's a safety play. That's like, you know what? Even if gold does crash, I don't care. It recovers faster, and it's already made such a big run. I don't want to be 100% in cash, because that is also dangerous, right? At the moment, gold is keeping up with inflation. I think just hold your gold plays. Let's see, where can we look? And we've talked about this before, but let's put the stats up here, and let's look at the wave magic.
Just
So this,
just a quick thing. If gold was to crash if gold was to crash 14% from where it's at now, you'd be looking at 2630 per ounce.
Yeah, that's exactly right. And that's interestingly enough, that's probably that's a really solid place to look for gold to crash right here. Because if you remember, this line right here, this is the line that we draw from the 1980 blow off and the 2011 blow off, right? So that's a major line. And it's gotten beaten. It did consolidation here. So you might tell yourself, well, it doesn't need to retest it. But in a crash like this would be a really solid spot to expect gold to hit and at least get a reaction bounce. But yeah, I mean, once the intervention happens, gold is going to pump. Everything's going to pump. Gold's going to new highs. So again, like we've talked about, my personal spot is probably this purple line right here. That's a really solid spot to look for gold to hit. That's the kind of place, like once it hits there, it could go further. Typically that's a really good stopping point, but it's not always a stopping point. Sometimes it kind of goes up like that, and then maybe it'll beat down or something. But that's a good place to swap, to rotate your positions out of gold and into something else. And if you can learn how to rotate, not trading, but you learn how to reallocate and rotate your allocations, right? That's where the magic is. That's better than just pure DCA. If you can get a reasonable pulse on what the market is doing, you just rotate your assets to where the thing is happening, and you just sit tight for a year, maybe 2 years, and you don't have to look at markets necessarily every day. But yeah, okay. So gold could crash. Gold's probably going to crash if everything else crashes. But it's also going to recover faster. Personally, I'm just going to sit tight on my gold positions and wait for a good opportunity to rotate. That it's getting close. Like gold is getting close to that opportunity to rotate. We're not quite there. I like how it seems to kind of be lining up with the notion of an intervention, the presumed intervention that Jay Powell basically told us that they're going to do if shit gets bad. Okay, so let's look at the reverse repos now. Reverse repos, as we said, were another indicator for us to tell us, hey, is this just like a fluke? Is this just, a wick, or is this real? Well, right now we have this uptrend, right? This is an uptrend that we haven't seen. We haven't seen the reverse repos act like this for quite a period of time now, since really before the bear market of 2022. So we have to go like way back here. In fact, we won't do it. We're not going to go all the way back there. That'll take too long. But anyways, this thing has been in a downtrend for a very long time. And now you can see reverse repos are actually in this uptrend. And likely what this indicates is risk off, right? Companies, institutions are parking money with the Federal Reserve overnight. You know, in reality, though, if you're an institution, you're a big money player, the Fed's going to be lowering rates. You're looking at this and you're saying, hey, the Fed's going to lower rates. Do I really want to park money with the Fed overnight? We need to get ourselves into bonds, right? We need to get ourselves into long-term bonds that are going to help keep us afloat through this storm, that are going to yield us, 4.5%, 5% while this shit's washing out. And that's a much more responsible play for them. And here's the other thing. If the Fed lowers rates and the bond rates go down, that makes the people holding the higher yielding bonds, that makes their bonds even more valuable that they can then sell on the market later. So right now, what you expect to see, and this is why we've talked about this for a long time, when stocks crash and things are risky, companies and institutions, they go into bonds, right? They protect themselves by buying high-rated bonds before the Fed lowers the rates. And because of that, you see bond rates going down. Yields on treasuries go down as companies pour into trying to hold treasuries. Because if you're selling treasuries, you want to sell them at the lowest rate possible, but the market demands a certain rate to actually purchase your bonds. And so there's like this kind of floating thing that happens there. And so if you have a whole bunch of companies saying, hey, I want your bonds, you're like, well, okay, but I don't have to charge you, you're not going to get a high percentage on this. I'm going to charge you, it's going to be a lower percent bond. So I don't have to pay you as much in the future. And the more people that come into bonds, the more that tends to happen, right? The more that you're like, no, we're lowering rates. And this is not the Federal Reserve funds rate, right? This is just the way that treasuries, the United States government is selling treasuries. So it's one of those big things that we've talked about for a long time. It's the pattern that happens every time when you risk off, you expect yields to sharply reverse towards the downside. And on Friday, we finally saw the actual manifestation of that. So if we zoom into the chart here, more, you can see that, okay, there was this big peak in January. Bonds have kind of been coming down since then. And we've had a couple sharp sell-offs here now. So this was a sharp sell-off, but it's nothing too crazy yet. But, next week will be very revealing, I think. Maybe some kind of intervention could happen, from the politicians, from Trump or something. Maybe something could happen where they come out and maybe they start talking up getting rid of the income tax, or eliminating the IRS. They could do that, and that might actually like put a damper on markets crashing for a little bit of time. But I think it's in motion, guys. I don't think this can be stopped at this point, and I don't think the cabal wants to stop it. Like, they might want to jack it around some, like, hey, it's going to be okay, market pump, relief rally, and then it goes back down. But I would say we're basically all but confirmed here that, yeah, this is the macro crash we've been talking about for a long time. So anyways, we're expecting bond rates to continue crashing towards the downside. We expect downside volatility, sharp movements, and that's another confirmation that, yes, this is the macro crash in action. Smart money institutions and even like pleb family offices are moving into bonds, right? That's just such a common thing to happen. So at the moment, yeah, that's a corroborating signal, just like we have the oil corroborating signal. Now that I'm thinking about it a little bit more, the reverse repos are kind of a corroborating signal, but this isn't going to smash towards the upside as much as we think, because the Fed is going to lower rates, right? So people would prefer, if you're an institution, you would smartly prefer to go get a high yielding bond now than to park money with the Federal Reserve overnight when you know that they're going to lower rates. And that rates are going to be crashing. So this might still trend up to some extent, but not massively, not like right before the bear market. Not like that. Okay, so I think mostly that's the macro. Let's take a look at the NASDAQ and the S&P, because these were the major crashes. So we're talking about crash. Where's this crash? I don't see it in crypto. Well, we're seeing it in the NASDAQ. We're seeing it in the S&P 500 in the stock market. So currently down 17.5%. That is more than just like a correction. The biggest one we had here, that was 11%, right? And then here, I think we've measured this many times before, but we'll just do it again. Right, that was a 6% crash back in April of 2024. In June of 2024, we had another crash, but again, that was 9%. So this is the largest crash that the S&P 500 has seen since the bear market, right? And if we crash, I can't remember, is it 20% or 25%? That's technically a bear market, at least from like the traditional
That's 20%
standpoint. Okay, sorry about that. Let's see. So yeah, S&P is not looking good. Oh, you know what? Sorry, I'm a little bit jumpy there on the charts. What we're looking for here in a macro crash, this is a solid level. So the 4,000 level, you kind of expect to hit the hit that lower standard deviation cluster. I'm seeing a comment here on YouTube. It says, "Is there a way to have these wave magic?" And the answer is no. I don't share it. I don't sell it. It's kind of my I can't I have to hold this a little bit closer to the vest, because if it gets out, it's the magic of it's going to disappear and people are going to start trading it. It's going to get out to big companies and then the alpha will be gone. So I've got to, honestly, I shouldn't even be sharing it with you guys, just, offhand on the price report here. Also, we'll get to BTC in a second. Oh, okay. So, yeah, we have YouTube comment. Roy says, "Body, do you think BTC will tank soon?" I think the answer to that is yes. Probably BTC is kind of acting similarly a little bit to gold. So it's kind of like this half risk on asset, half digital gold. So maybe the maxis did actually manifest the gold, the gold mantra, or they repeated it enough times that maybe it's become partially true, right? Maybe Bitcoin can act as a little bit of a risk off hedge, an inflation hedge to some extent. It's also obviously correlated to risk on. So, but yeah, I mean, if we think gold is going to crash, then Bitcoin is going to crash with it. Especially if we think about, okay, Bitcoin has all these ETFs, you got MicroStrategy, you've got just all the stuff integrated into the regular financial markets now. And when things crash and people just smash the sell button, they smash sell on everything, including gold, including Bitcoin, and they go to cash, right? That's a phenomenon that happens. So you would expect, I mean, Bitcoin should eventually show some crashiness with the rest of the market as well. It's really interesting that it's held its own on Friday, but I don't think that's going to continue. It shouldn't. From a very theoretical sense and from a historical sense, that shouldn't continue. It should eventually follow down. So, if we have any super chats as well, let me know. I don't know if we do, but yeah. So anyways, okay, stock market, we're looking for 4,000 here. That would be a pretty obvious spot. Is that going to be the absolute bottom? I don't know, but it will be a good spot if you're a stock bro. If you have your 401k or you're managing your own stuff, right? This is a spot to pick up some stocks and then just sit tight. Hopefully that'll coincide, with maybe the week after Fed intervention happens, it's all in flux, right? It's all fluid. So we're going to have to look and say, what's the sequence of events and how does it relate to the, what's happening while things are dropping and intervention happens, and where's that in relation to my tea leaves astrology for dudes here on these charts, and then we can make a decision later into the future. But for now, you'd be saying 4,000 is a headliner number for the S&P 500. And on the same token, we would say about 12,700, 12,300 is the same. It is kind of like a similar wave magic level for the NASDAQ to pick up NASDAQ. I recommend, so if you're asking me, no one has, but if you would ask me, what would I say that you should buy at the bottom? I would say just buy the NASDAQ, bros. Just buy it. Just the NASDAQ is gonna keep the top companies there in the NASDAQ. When you buy that ticker, it tends to go up 10% per year. It's going to go up way more than that, and a liquidity expansion, and a renewed liquidity expansion. And then also buy semiconductors, buy AI, buy the big ones, right? Don't buy the little ones. Maybe if you really know what you're doing, then you don't really need my advice. But if you're just what do I buy? Buy a semiconductor ETF, right? Buy NVIDIA, buy the NASDAQ. So anyways, that would be my suggestion there. My professional financial suggestion, because it's not financial advice, whatever those lawyers decided those words mean as they rubbed their hands together, anticipating the lawsuits. All right, we already talked about bonds. Let's see what they did with the GDP, because they're always revising these numbers. GDP now, they say for the last quarter was minus 2.85. Okay, yeah, that's going to stay negative, and the next quarter that we see, the next numbers we see, it's going to be too late. Probably the crash will be bottoming by then, or have already bottomed. And we're going to be getting negative GDP for this quarter as well, most likely, since all this craziness is happening. These numbers will be interesting to look at, but they're so slow. We looked at these a long time ago. We said, hey, is the monetary system collapsing? And it's well, no, it is kind of at certain, in one chart here, debt to GDP is kind of at World War II levels of extreme. But we've been at World War II levels of extreme since I don't know, 2012 or something. It just doesn't seem like this chart matters. And everything else, the interest payment on the debt relative to the GDP, federal expenditures relative to the interest, all of that stuff, none of that is really really terribly looks like problematic. I've been hoping to see new numbers here, but these charts move so slowly. Like it could be next year and we're like, oh, these charts look the same. So, but if they spike, these charts would be like warning bells, very long-term warning bells if they hypothetically spike in certain directions, and they're all spiking, which could happen during a macro crash. And I kind of expect that to happen a little bit during a macro crash. But anyways, probably don't need to cover that too much. All right, we already covered Monero. Let's just go to crypto in general. Let's go to Bitcoin. People asking about Bitcoin. So we're on the daily chart right here, and yeah, Bitcoin like fell to moving average cluster. It almost tried to tag the swing high, right? The previous swing all-time high back in back last year, back in like March of last year. That would make a whole lot of sense to tag this line, right? To tag that and establish that as support, and then go towards the upside. Since we're facing the macro crash, I really expect this guy to probably go towards the downside. My hope and prayer is that we actually tag the green line. This green line, let's actually clear everything. Let's go back to regression analysis. This regression analysis is free. You can get this. I do share this. You just go to Bowdy Anarchist on TradingView, and then you'll see the stuff that I've shared for free. There we go. It was lagging there. Okay, so effectively, this is the Bitcoin boundary price, right? The red line is sell, the green line is buy. Really, DCA below the blue line is the strategy. And as you approach the red line, DCA out of Bitcoin. And the last time that we had a macro crash was obviously 2020, and we touched the green line. This green line is it's defined by this touch right here. It's defined by that, because the macro crash of 2020 was a more divergent price of Bitcoin from the model than even the bear market low, because it occurred so much further in time. And believe it or not, the same thing happened back in 2015. So we had the bear market bottom that happened at the beginning of 2015, but then a whole year later, Bitcoin kind of crashed again. And believe it or not, the more divergent part of the model is not here, but here. So we defined the bottom of the green line on the basis of the most divergent points of the model, right? We're trying to say, what is the absolute lowest boundary we expect Bitcoin price could ever hit? And right now, that absolute lowest boundary that we would expect Bitcoin price might hit currently sits at about 36,000, 37,000. We go, it's a rising line, so it would be like 38,000. I know that sounds crazy. I know it sounds crazy. And maybe Bitcoin doesn't fall that much. It doesn't have to. I'm just saying that if it hits this green line down here, that is your buy point. That is your leverage long. That is your irresponsible leverage long. Like, one thing I would recommend doing maybe is, if we hit this line, stagger your bets, right? So put a big amount of money, obviously just buy, no leverage. Put some like reasonably large chunk of money into buying on like 2 or 3x, right? And then put a small amount of money and leverage like 10x or something, right? Something stupid, something 15, 20x, right? Leverage a small amount of Bitcoin on big leverage. And, if you get liquidated, you're like, all right, whatever, I got liquidated. You won't care, because your other gains will be really good. And that liquidation will only happen for a short period of time. And your other stuff should be fine. But if it doesn't get liquidated, and there's a reasonably good chance that it doesn't, right? Especially if you touch the screen line, you could make 10x on a small bet, and you could really, really that could amplify big time. So anyways, that's a spot to look for. If we turn on the wave magic on Bitcoin, we can look for some more spots, some more wave magic levels, clustering of bands and whatnot. So this probably we won't ever get down to these orange bands. That would be like absolute destruction. I don't think that these orange bands are a reasonable place to look for, but a reasonable place to look for, I do think, is this convergence where you have the lower blue bands. I know that's a little bit hard to see. That looks like white bands, and it's convergence of the moving average clusters, but also the lowest standard deviation cluster sits right here. So that would be another spot to look for. And it's interesting because that's actually that's convergent. That spot is convergent with the lower regression analysis on Bitcoin, basically the green line, which I just added there. So yeah, those are the levels I'm eyeballing, guys. I'm looking for max opportunity. I will remain fluid. So when they do the intervention, we will evaluate. Usually it takes 1 to 3 weeks for the markets to bottom after the intervention happens or is announced. So we might not buy immediately as JPOW intervenes, but maybe we do. Markets learn, so shit gets front run. So it might be wise to just buy the market whenever JPOW intervenes, under the expectation that it could go lower still, but you're starting to DCA back into the market if you've sold here, or if you have a big cash position, right? So yeah, we could definitely be looking here. 40,000 Bitcoin wouldn't be an unreasonable level at a minimum, guys. I mean, we should at least expect 60,000 Bitcoin, I think, in this macro crash. Like that's, I don't see how we don't go below that, but at a minimum, I would expect 60 grand on Bitcoin. So anyways, yeah, that's what the Bitcoin chart looks like. Dominance, I hate to say it, dominance is probably going up here. Like people are gonna, if people are fleeing stuff, right? If people are smashing the sell button, they're gonna, they smash sell on the alts to go to Bitcoin. They smash sell on Bitcoin to go to gold. They smash sell on gold to go to the dollar. That's just, you know, that's the order of love or hate, whichever way you want to phrase it. But Bitcoin is coming to these big standard deviation levels. This should be a stopping point, not a hard stopping point, because, like, for example, you can see here, right? Price did wick above that, and we might see, you know, some wicks that do that. But overall, this should be the end of the Bitcoin dominance bull market, and especially as the intervention happens, the liquidity expansion happens, you're going to see altcoins make another big run, and like, yeah, that's, you're going to see really good opportunities to pick up shitcoins, guys. Like, honestly, when you see Bitcoin dominance spiking, that's the time to be picking up shitcoins, right? When you see Bitcoin dominance at like 65% or some shit like that, or 68%, that's when you sell. That's when you sell your Bitcoin, you get into altcoins, and you're going to be doing really good there. Like, just statistically speaking. Z-scores, nothing happening on the Z-scores. You can see everything's basically flat. It looks like Tron is somehow doing good. Okay, whatever. That's just the cabal deciding which coin they want to pump at the meantime, or maybe there's some like money moving that they need to use Tron for something, probably Tether, I don't know. Anyways, yeah, Monero's still sort of like doing well above everyone else in terms of Z-scores, you know, still holding its local highs. Everything else is well below its local highs. Oh shit, including Litecoin. Hey, you remember a few weeks ago, we were like, hey, Litecoin is like pretending like it's going to hang out with us. And then it actually just fell, and now it's lower than everybody else. So big laughs were had by all regarding Litecoin. I don't know if you guys want to look at privacy shitcoins. Nothing is good is going to happen as macro crash happens with privacy shitcoins. Expect this to get worse for these guys. Pirate Chain, sorry, R bros, sorry, Mexican anarchist, dollar vigilante, anarcho people. Pirate Chain is probably not going to do so great here. It could easily break this down and go for this level. It could easily lose 40% here. Maybe you get a reaction bounce, right? So we've got the structure defined, we've got this descending wedge. Maybe you can get a reaction bounce, and that wouldn't even be too crazy. So let's go to the 8-hour, and you'll be able to see the wave magic a little bit easier. So what has happened, right? The wave magic lines have curled down. The standard deviation clusters are curling down. It would be reasonable maybe to like kind of spike and hit that guy, and then eventually break down. But this wedge structure is going to break down at this point. Like, I can't imagine that any macro crash sees Pirate Chain somehow not being affected. So can you hear the ridicule in my voice? I'm sorry, guys. Pirate Chain, if it just wasn't so heavily pre-mined, all you guys had to do is merge mine with Monero, and I'd actually support it. But okay, whatever. Zcash pretending like they're cool. They somehow pumped 26% in the past. Oh, did they? No, that's the weekly. Let's see what they did. Zcash still like, yeah, I mean, okay, whatever. They hit these upper standard deviation bands. That's not good. Zcash is also going to crash with the markets as well. I don't see how they can save that. Darrow, lol. Here's the Xano chart. I will let you guys look at it, and y'all can decide what to do with this chart on your own. There's the daily. Here's the 4-hour. Because I'm not going to be the reason. I'm not going to be the reason that Xano makes moves in the markets, right? Like, I just don't want to be the reason. This might be a thing right here. It actually looks like it has been significant. That's a clustering that's kind of dying off, but it's still like a level, I guess. I don't know. Whether that breaks down or holds as support is for you, the listener, to decide. Goodbye, Xano. Okay, unless there's anything else, unless there's anything else that people have for us, maybe we could look at the Bitcoin versus the NASDAQ, I guess. That's probably something for us to look at. Bitcoin's doing relatively well to the NASDAQ, and it's going to beat the NASDAQ. When the liquidity expansion happens, Bitcoin is going to resume its bull market versus the NASDAQ. Currently trying to beat those all-time highs that happened back here, 2021. So far, like, you got to beat the NASDAQ. If you're Bitcoin, you got to beat the NASDAQ. Otherwise, why didn't I just buy the traditional market, right? Bitcoin is going to beat the NASDAQ. This is a long-term bullish structure. Yeah, maybe it could like fall down here to these levels, and then come back and do this. But I mean, it's ultimately going to get higher there. So like we've said, Bitcoin is just tech stocks on steroids. And somehow it also seems to now actually be acting as a digital gold. That narrative, congratulations, they created the reality, they manifested, they mantra, they did the thing, they Buddhist their way to making Bitcoin at least partially digital gold, despite the fact that there's no fungibility, no privacy, and no transaction capacity. But hey, they still did it, kind of. So, little clap, I guess, for the maxis on that one. They actually kind of did it in a way. So, but I mean, okay, that it's the Trojan horse, right? We can get our stuff in there. We can affinity scam, as they as the maxis would say. We can try an affinity scam. So let's just manifest an affinity scam, quote unquote scam, with Monero, and then overtake. Right? That's what's going to happen. Trojan horse was never meant to survive, but the mythos of the Greeks defeating Troy was meant to survive. So the Trojan horse Bitcoin, I don't know where that wooden horse is going to end up, guys, but the thing that will survive is the legend, which is Monero. All right. So with that positivity, I'll leave it there. Unless we have some questions, shoot me the questions if there's anything else.
I do have one question for you there, Body.
Please, sir.
How do you do different disparate assets? So, for example, I'm big into selling things directly for Monero. And obviously, while I don't have barrels of oil to sell, how would you go about selling barrels of oil for Monero properly?
I probably wouldn't go about selling barrels of oil for Monero, but you're going to have to, if you really want to do it in a sustainable way that the government won't shut you down, because we all know, was it Ian Freeman, right? He was trying to sell a version of oil, gasoline, and they totally screwed him over. You would need to make a corporation. You would need to get the permits. You would need to probably just operate without pretending like you were going to do any cryptocurrency and oil, anything, and just do dollars for a while. Establish yourself, make a market niche, right? Make sure that you've got a reasonably stable business model, and then start selling for Monero, right? And then start selling for, you might have to open up to at least Bitcoin, but maybe you sell for Bitcoin and Monero. That is the only way that I could see that you could make that happen.
I guess I didn't quite make myself clear. I meant with the price fluctuation. So obviously you can post Monero to a simple moving average like I always do, and you can post oil to a moving average like it's possible to do. But oil moves a lot more than Monero, actually, it seems like.
Let's actually take a look at it. So first of all, we'll divide XMR by oil, and then we'll take a look. Maybe not at the weekly. That's too long. Let's go to the 2-day chart. So yeah, what you're saying is there a way in crypto to get exposure to the oil price relative to Monero? Is that about right?
No, I'm just saying if someone were to want to sell oil for Monero and keep it within keep it where they don't have to recalibrate the price every single minute, how would they go about doing so?
If they want it, so if I'm sorry, man, I guess maybe I'm just retarded this morning. If they wanted to sell,
he wants to price. He wants to price oil in Monero, right? Is that what you're saying, Shortway?
Correct. I would want to price oil in Monero. So I'm always saying use the 365 moving average for Monero, right, or the 200-day or whatever. But oil moves independently of Monero, very, very much independently of Monero. So how would you price oil in Monero since they both move kind of rapidly, especially if you don't use averages?
I would start by dividing the two charts. We could either divide US oil by Monero or divide Monero by US oil. If we divide oil by XMR, which is probably the more correct way to do it, so we would say US oil divided by XMR USD. What you would then say is every barrel of oil costs 0.288 Monero, and then maybe we could add a moving average, right? We kind of like you do, right? I think that's a really good simple strategy. I like the simplicity of what you do. It's straightforward and it makes sense. And especially since Monero has been fairly stable, you could just take the 365 moving average of the US oil divided by Monero chart. Let's make this a little bit easier to see. Yeah, let's just make that a nice fat line. Okay, so that fat white line is the 365 moving average of how much XMR it takes to buy a barrel of oil. So that's been pretty stable between 0.43 XMR up to 0.55 XMR ish. So I think, would this answer your question? Is this kind of what you're getting at?
Yep, that's what I'm getting at. Thanks.
Yeah. At the moment, it looks actually like oil is undervalued relative to Monero. So at this moment, you would actually expect, you would be buying oil down here, saying, "Wait, that's mean reversion. We should see some movement towards the upside." This thing could probably get down farther, though, right? I would expect that this chart could fall further. Oil could become even cheaper especially with how well Monero's been holding up. Monero's price relatively has remained pretty high. Although, I mean, still, guys, like I don't expect that, if there's a macro crash, I don't expect that Monero is going to hold this $200 level. I would expect some washout to happen, but probably just big wicks, probably just big wicks down. So stay vigilant during the week. If you see Monero hitting these nice little wave magic levels, so like 165 is a first spot, and then 135 is the next spot, and then $100 is like free money. It's like, if you see $100 Monero, they're like, here you go, here's free money. All you have to do is buy, and you will make money. Like it's really, honestly, it's that simple. I know that sounds simplistic or whatever, but yeah, good question, man. Good way of thinking about things. I like that you continually push us back towards asking, what is the value of this asset relative to Monero? That's a good way of looking at things.
All right, awesome, man. Let's see. What do we have? Super chats here. We have Barn Jerky tip $21.21. Wow, thank you, man. Very, very, very generous. Happy to be on the on to share my jerky story. Glad to be here. Yep, we're bringing him up next as a special guest, and maybe I will send that $21 worth of Monero back to you as I buy some jerky over here online. Anything else for body? I think the one guy who was asking about the head and shoulder, he did end up putting he was saying left shoulder December 24th in terms of has XMR, does it have a slanted head and shoulder on the weekly?
Left shoulder December 24th. 24th or December of 2020? It's got to be, he must mean December 2024.
Yeah, December 2024.
Oh, I see what he's saying. Yeah, okay. Yeah, so it's like slanted head and shoulders. I'm not sure that's even a pattern structure. I probably wouldn't use head and shoulder in this case to define this. I feel like that's you could do that, like, and maybe I wouldn't do it on the stream here. I would have to take like a half hour or so and play with this and like maybe try and rotate the chart, like take this slant out, like decide, okay, what's the, like, here's the way my thinking process would go on this. I would try and draw some like best fit line here and say, okay, how much is Monero's price going up, and then make an equation, just a simple like y equals ax plus b, and then you would subtract the price from using that equation. You would readjust this price downward to make it flat, and then you could say, okay, is that a head and shoulders? Honestly, that's going too far, right? Like these patterns, like they often imply certain types of market action, like this kind of thing, this type of action is happening in the market, and it tends to form this kind of pattern, which is why these patterns have a slight statistical probability of playing out in certain ways, but they don't always play out that way. As humans, we look for patterns in everything, and sometimes we see patterns where they don't exist. So you always have to like keep that in mind. That's our natural tendency to do that. And my only objection to creating a slanted head and shoulders would be that it requires interpretation, and it even requires some mathematical adjustment if you want to actually reduce some of the subjectivity of that interpretation. So I like personally, it's probably not something that I would use. I would probably use just more straightforward pleb lines, stuff like that. You can actually see that I kind of have some pleb lines drawn here. If we go to the daily, they make more sense. Maybe I drew them a little bit too far, but yeah, I mean, anyways, yeah, I probably wouldn't use that kind of metric unless you could like show me a compelling case, which I would be totally interested or, totally open towards if you but you would kind of have to like show me, because right now my brain doesn't fully feel like that would be a useful thing, but it could be. So anyways, that would be my answer there.
All right, fantastic, man, fantastic. So yeah, looking forward to see what next week brings. 60K Bitcoin sounds pretty good. 40K Bitcoin, wow, yeah. You're definitely all in on Bitcoin, and I assume Monero at that point. Anybody,
yeah.
if we ever get there, if anybody has any loose change, that is the time to get it out. But I don't know, man. I don't think we're going that low. I really don't think we're going down to 40. I would even be surprised 60 at this point.
I'm not calling for 40, but I'm hoping for 40, right? That's absolute maximum opportunity, and it would also just beautifully match that lower boundary on the regression. It would be great. Might even be fantastic.
Yeah, I mean, I guess if the macro continues to get like super crushed, and things just play out, just continue to develop in a way where things get worse than even imagined with regards to the trade war that's going on. there definitely is some black swan type of things that could come out of this, right? With regards to where Trump is taking us with this trade war, like we don't really know what the repercussions may be, right? It could get a lot worse before it gets better. Things could start to potentially break, perhaps in ways we haven't imagined.
One of the big problems is leverage. Like what happens is you get this big leverage spin up on the new technology or the new thing, right? In this case, AI. And the banking system is designed to produce that, right? Effectively, the printing of money, all this excess printing of money is effectively a type of leverage in addition to the actual leverage that gets, you printed money, which is a type of leverage. And then that leverage gets even double levered in the markets where you get these big firms like doing all this crazy stuff and these like all this crazy stuff. And then once you get a situation where you have an economic recession, like is happening right now with the trade wars these are wars. Like on Friday, there was retaliatory tariffs that a consortium of nations announced, right? So when you get that, you get an unwinding of the leverage, which means things can fall a lot farther than we think they can. So it wouldn't be unprecedented, right? 2020, we saw Bitcoin fall like 65% from its top. We could see if we saw the same thing here, 64%, that would put us at 40K. So I'm not necessarily calling for 40K, but it is on the table.
That's another reason I think it would.
Go ahead, Charlie.
That's another reason I think it would be hard to cause Monero to drop a whole lot, because really there isn't a good way to leverage Monero with like the Ethereum shitcoins or whatever. You can like USDC and then Aave borrow some more and then like in and lever yourself up. With Monero, it's really hard to lever Monero.
Yeah, that's a great point. Which is why I think one of the phenomenons we've seen with Monero is when price is crashing. Yeah, you see Monero crash more, but it's a wick. It's only for like a day. Or like maybe a week maximum. Monero price will crash. And my assumption is that's effectively exchanges maxing out their fractional reserve, right? They're trying to dump as much Monero as they can on the market, but then they start running into withdrawal problems and they don't want to look like they're running into that. So like, I think they can jack the markets around a little bit, but the people in Monero, the people that bought Monero, we're not selling. Like, we don't care if there's a macro crash. We don't give a fuck if the market crashes. We're not selling. And so they can only jack the markets around so much on that basis. And so you're probably right, bro. And like that $100 is a pipe dream. You're probably right about that. I think 137 or 135 is like a spot potentially. Like that could be a real spot. But yeah, like the Monero price is built organically, which makes and like, a very good point, man. Really brilliant point, actually. That without the leverage there, it's harder for it to unwind. It's harder for price to just utterly crash for a long period of time.
Buddy, what do you put the odds at President Trump effectively eliminating the IRS? Are we still at like a 0.1%? Or things ratcheting
No, I
up?
give him at least 10%. I give him at least 10%.
That would be wild. Like you said, I mean, that's the only way this tariff thing makes sense, is if on the other side of the equation, we eliminate the IRS. I mean, another thing that would be nice to eliminate is fiat, right? And the Fed. Right? Is that, could that be? I mean, it looks like Trump is going to be going out. There's a tariff war going on. It looks like there's going to be a war against the Fed itself, too. Because, I mean, Jay Powell may not listen to Trump, right? He seems like he's, really not taking Trump's advice here, and he might continue to do that for, I don't know, political reasons, whatever reasons he has, or just because he really thinks it is the best thing. But I could see it getting to the point where Trump starts calling for the ending of the Fed because he gets so pissed off at Powell.
No, that's 0%. At most, there's like he'll just replace Powell with someone that's gonna do his bidding. But no, like there's a 0% chance Trump's going to try and end the Fed. Like, it's just not going to happen. But there is a chance he might either totally gut the IRS, or like just try to eliminate it.
And we've talked about this before. Like, do you think there is even a way to effectively eliminate the Fed at this point and go back to a gold standard, obviously, or a Bitcoin standard, or some hybrid version? Like, what do you see as being the process to do that? I think some people say like we can't go back to a gold. I don't know why you wouldn't be able to. I mean, markets would just adjust. I don't see. I obviously would cause a shit ton of issues, but I don't see anything that would physically prevent it from happening.
No, I don't. I don't think that necessarily there's a prevention. I think to do it without just destroying the economy for a long period of time, you'd have to take some really careful steps. And I've never really thought. Honestly, I've never thought like, okay, well, what are the actual steps to not crash the economy, or at least too badly? Well, one of the first things that you would do is you would set limitations on the reserves, right? So you'd say, hey, currently it's basically infinity to one. You would at least at first go back to a 9-to-1 ratio and be like, listen, you can only print 9 times more than what you have in reserves, and then you would slowly decrement that over time. Other things that you would do is bring back, I think it's Frank Dodd, right, where they tried to separate investment banking from commercial banking. What you want are depository institutions that just don't reinvest that money, right? Investment banking is a whole other animal and fraught with risk. And you don't want people that are depositing money to end up losing that money because the bank, or having to invoke the FDIC because that bank made risky investments or printed money to make loans to other people, to other risky investments. So, right, you would start walking back that fractional reserve ratio, and then you would bring back some simple basic protections. You would, if you wanted to not prosecute, you really need to prosecute Wall Street. And Iceland is a good example of what happens when you tell people you can't do stupid shit. But you really have to start enforcing against the insane, reckless leverage and the too big to fail kind of stuff. You have to reduce the regulations against the smaller institutions like credit unions, for example. Like, you really want to promote credit unions more than anything. So you'd have to reduce the regulations and give credit unions a big window of opportunity, and small institutions a big window of opportunity to reemerge. Because credit unions don't do fractional reserve, right? And then you would start saying, okay, listen, we're going to audit. Obviously, we're going to audit the Fed. We're going to audit Fort Knox, and we're going to start requiring more and more reserves to be in certain assets that are important, that are transitionary, right? Like Bitcoin would be one of those. Like, okay, sure, whatever. I know it's whatever, but you would say, okay, the reserves in the Federal Reserve are now going to be based larger and larger on Bitcoin and gold, and maybe some other assets as well. And you would just make this slow transition to self-restraint on the monetary policy until you actually change things and you say, okay, our currency is now pegged to these things, right? Gold, Bitcoin, and maybe, I don't know, something else, maybe partially
Monero.
silver. Monero, obviously. Yeah, obviously. Sorry. And maybe silver, right? You might remonetize silver, and you might say, hey, let's get the cash economy going again. Let's remonetize silver. Let's bring back the 1965, quarters and dimes and whatnot. You would take all of these kinds of steps, and you would transition the economy. Like, that's a command down structure that you could do in a political sense to actually return things to some level of sanity. Sorry, I know that's a long answer. I hope I didn't ramble.
No, it's a fantastic answer, and as you say it just seems more more possible than we might imagine. I mean, like you said, it doesn't have to be that they completely rip off the Band-Aid. It could be, all right, we're just going to put constraints on how much money we can quote unquote print relative to the gold that we hold.
If they did it all at once, it would be an absolute disaster. But if they did it with, like the way Body mentioned, slowly upping the reserve requirements on banks. And another thing is I think that it actually would take a little bit of regulation as well. As much as I hate regulation, you might have to put in more regulation to say you can't lever more than, say, 2-to-1 or something like that.
Yeah. You have to unwind this whole financial spider that's happened to try and, into every part of the economy.
I do feel like there is a mega Bitcoin case here to be made if like things go in the right direction, as the market tanks more, the tariff thing stays, and then things come rip roaring back. If Trump effectively eliminates the IRS, does things like there's easy things he could do, right? Even before eliminating the IRS, he could eliminate all capital gains on crypto. That could be something that, one of the easier steps that he does before he says we're getting rid of income tax altogether. He could do things like that, and maybe starts to, move towards backing fiat with gold and crypto. I mean, they're creating these reserves, so it's not that far of a leap. And if all that happened at the same time as regulations are lowered, you could see a booming of the economy in return. And then I don't know. I think that's the direction they're trying to head. But you know, to be determined. And I don't see how they do these things though before the midterms. I mean, and you know, I think Trump, you know, the Republicans are going to get crushed in the midterms at this pace. So, you know, unless things start to move very quickly.
I think if you want to do it properly, it would take a decade at least.
I think so.
Like
Yeah.
without crashing everything, I think it would take a decade.
So once Trump gets crushed in the midterms, and then what happens? You know, then it becomes like his hands are kind of tied at that point. It's going to become a lot harder for him to do anything. So there is that scenario, and then where does that put us? That just kind of continues us on this downtrend, I would say, in the broader market.
Yeah, I feel like in order to eliminate the IRS, they really needed to play up. Like we're gonna implement tariffs and eliminate the IRS. Like they needed to put those together hand in hand in the national psyche.
Yeah, but maybe they want to do one and then, you know, but maybe they want to do one then the other because they want to tank the economy first so that then they could get Powell to, you know, also then super low interest rates. So like, let's lower the interest rates. Nobody's getting taxed on anything. And then it's just, you know, it's putting fuel in the fire. As opposed to announcing both, and then like the impact of the tariffs wouldn't be as bad. It wouldn't put as much pressure on the Fed to lower interest rates. So this way they kind of, you know, push the Fed into lowering interest rates, and then they come back and then they say, okay, and in addition to low interest rates, look at all these other things we're doing on the other side of the equation, getting rid of taxes, continuing to eliminate regulations, and, you know, all this corruption that we found with Doge. I mean,
yeah, you know, that's a possibility. That would also maximize, like, it's a whole, the elimination of the tariffs was a chapter, right? The next chapter in the political theater would be the elimination of the IRS, or at least the massive reduction of income taxes. I bet you they won't eliminate income taxes because they're going to want to maintain that, like, we have the right to do this. They don't want to get rid of that entirely. So maybe they'll just like drop income taxes massively. That's a possibility.
Yeah. And that's a whole lot, like, I don't even know how that happens effectively. Like, how do you eliminate the IRS? I mean, Congress doesn't need to be involved in that in any way?
I'm not sure anybody knows. Like, the courts don't know, like, because they didn't care that there would be some Supreme Court you to pay taxes.
There'd be some Supreme Court case at the end of it, right? If they were trying to do it, like, it wouldn't just, there'd be a lot of hoops to go through politically.
I saw, and this is completely unreliable, but I saw some meme or something, or some people were saying that the IRS was formed by Lincoln initially as a revenue means to prosecute the war, and then they, you know, they did the amendment or something, and the First Amendment, and I don't know, like, I don't know if it's an executive order, because they did a lot of executive order shit back in the day, right? Back with like Roosevelt. To do a lot of things, right? That was like the emergence of the executive order. So I don't know if it's like an executive order that he could just like change the tax structure. Who knows, man?
And same with ending the Fed effectively too, right?
That definitely was an act of Congress, right? They actually did get the Federal Reserve Act in 1913. So you would actually have to get an act of Congress to remove the Fed.
Yeah.
But in terms of monetary policy, there's a shitload of things that they could do to be more responsible without going through Congress.